What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
With Sam Sells. How you doing today, Sam?
Hey man, I'm doing well. So good to be on the pod, Dan.
For sure, for sure. And I got some great news for you, Sam. Today we are joined by my very favorite audience member. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators. That means buyers, sellers, investors, operators, all that kind of stuff. And why would I do such a silly thing, you may ask? Well, if you've ever heard of off-market deals, private or perhaps 506B deals, you might know that the SEC requires that you have a documented prior substantive relationship, or else they'll get ants in their pants and they'll take all your money and stuff. So it's important to me to know everybody, know exactly what they're looking to contribute to these deals. And the benefit for you is I've got this in a format that will really assist you effectively communicate on the subject of commercial real estate, which I think is one of the key factors in your success in this industry, regardless if you're just an investor or if you're looking to go active. But before we get too deep into business, Sam, do you want to say a thing or two about yourself before we get started?
Yeah, sure. So Sam Sell's been in the business now, ran my own business in commercial real estate since 2018. So that's coming up on 6 years now. We've syndicated, we've done joint venture agreements, partnerships, all sorts of stuff, self-storage, apartment communities, mobile home parks, now working on some other stuff, food hall, urgent care facilities, all kinds of stuff. Before that, retired military and been all over the world doing global health projects. So
I
yeah.
love it. I love it. That's some great stuff. It brings me to the first segment of the Chance Encounters, which is the 5 distinct motivations. Before I do that, you're ex-military, so you'll like this. But wait, check your 8. Sam, I don't know if you can see through the camera and into the user's device, but down there on your 8, if the audience is 5, there might be this hideous subscribe button, and maybe they should, get that out of their life for forever because, okay, it's a stupid joke, but whatever. I do it in
Yeah,
every
do it.
episode. Exactly. The 5 distinct motivations. Everybody has their own unique why. That is a fact, but I found that they fit pretty cleanly into these 5 different categories when I'm talking to commercial real estate investors, syndicators, and whatnot. So it's important for me to know what's going to keep somebody in a project, see it through to completion, because it takes months. There's plenty of risks involved, and there's really got to be the reason there, or else somebody might try to just take a break from their responsibilities. So I ask them which of these makes the most sense. The first category, preservation of purchasing power. What on earth is that? Well, if you already have a portfolio of assets and no W-2 job, the way that you make ends meet is from the proceeds of ownership. If you're already in that situation, why on earth would you want more stuff, more assets, more buildings or whatever? Well, there's a couple circumstances that stand out. One of them is if inflation is eating away from the purchasing power of your cash flow, it's time to make another acquisition because after all, you don't want to get rid of the assets that you use to survive on. The other circumstance is if there are signs of distress or an asset crash, you can buy at a steep discount. That's going to make sense if this is your play. But I'm not at that stage of my life yet. Where I am is trading time directly for wealth. Basically, if we flash back to 2011, 2014, that neck of the woods, I was in the tech industry, specifically in the CRMs. I worked for web.com, its e-commerce wing, oneshoppingcart.com. And since 2014, I've been helping real estate players do all their IT, all their marketing, all their funnels, just installing all that on the internet. But as I was making my six figures, I noticed that my boss was making roughly 10 times as much as I was. And I was going like, well, how is that possible? What exactly is this person doing to pay way less tax than I am? And once I found out that neat secret sauce, I was like, how can I start working where the reward for my effort is in deployed equity, aka capital, instead of salary, and then paying Uncle Sam an arm and a leg? So that's what I'm up to. But that's too abstract for especially youngsters. A lot of people, what they're up to, why they're attracted to commercial real estate is because they want to take control of their schedule. That might mean they want to hustle real hard right now and retire early, but it might mean that they just want to work fewer months per year or fewer weeks per month or fewer hours per day or something like that. And that's really the motivation for these guys. And honestly, that's not universal. Some people think that it's everybody, but it's not. The next group, they're just plain ambitious. They want to buy their entire hometown. They're after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that's why they're going to hustle into their 90s, making them fantastic members of any GP team, and keeping with those new deals and processing it and making lots of profits. So that's fantastic. Another group that's similarly motivated, but the focus is what's different. Some people have picked a sector of society. Maybe it's animals, maybe it's the environment, maybe they want to send people to space. But regardless, they figured out that there's a financial component to making a big social impact. So you got to really boost that net worth. And the way that some people do that is through commercial real estate acquisitions. So Sam, of those 5 different motivations, I'm sure there's some combination of them that you'd say describes you best. What comes to mind?
So we're impact investors. We buy heavily distressed assets, communities, and our properties, and we turn them into clean, safe, affordable communities that people can live in, workforce housing, bottom end, basically the gap between where Section 8 hits and where workforce begins. And so we do that. We align the incentives so that we make money in a capitalistic paradigm. We make money helping other people.
I love it. I love it. It's so important to do. But of course, there are plenty of risks involved, as I mentioned. And if you've ever been involved in a 506B syndication, the securities attorney in the mix, and there really should have been one, I hope that isn't news to you.
Yes.
But the securities attorney will insist that every investor, every partner, limited or general, fills out this questionnaire. It's like some people call it a suitability questionnaire. It's really invasive questions about your finances, probably going beyond what you know about your own parents' financial situation. But there was one question in particular on that questionnaire that's more or less standardized that I thought it didn't really serve an effective purpose that I was pleased with, and it was the tolerance for risk assessment question. So I got my own. It's a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. Sam, it could be inside real estate, outside real estate. What's too risky for you?
Bitcoin, any of the imaginary money out there that's primarily used by large criminal organizations. Yeah.
Right. And some of them geopolitical in nature too, right? Yeah, I'm totally there with you. It like I prefer the term intangible because it's not like a subscribe sandwich, which sounds very filling and delicious right now, which is also the segue. That thing just kills me every single time. But
That's awesome.
it's to remind me it's time to pull out the Dan Does Deals Commercial Core Competency Cube, and it's got the 6 different roles in a commercial real estate deal. I go through all 6 sides in every episode because, again, one of my priorities is to make sure that you can effectively communicate on the subject of commercial real estate deals. If you want to practice with this die, you can go to dandoesdeals.com. You can print out your copy for free. And like a complete dummy, I didn't even ask for your email address. That's the cardinal sin of marketing. You never give away your freebie without getting some sort of contact information. But I really think that your future in commercial real estate hinges on your ability to communicate effectively. So that's why I go through all six sides in every episode. I take 2 minutes, and then you'll know also how my guest fits into these deals. So let's get started. A repositioner is an acquisitions person. So they're constantly looking at all sorts of different properties and doing all sorts of paperwork. What's this paperwork, you may ask? Well, there's a fancy word for it. They're underwriting the deal. So that means they're trying to tell the future and they're doing the math to do it. The first thing they need to find out is the broker or seller even being honest about how much the property is actually making? Because so the repositioner has to figure out how do they change the business so that it makes more money. And one of the less intuitive parts of syndication in this business in general is that every repositioner has to have a vast network of financiers, lenders, people who deal only with paper and money. So banks and that sort of person. And the idea is that they're not on the GP team, so they're not making asset management decisions. They're purely just taking care of the finances. So why do repositioners have to have such a vast network of financiers? Well, if you can secure a more advantageous loan, that goes straight to the profitability of the business. So that's a key part of the business. But that's not enough. The repositioner is next going to take a look at the operations and say, how do we get those Benjamins to stop going down the toilet? But of course, there's more to operations than just unclogging toilets and mowing lawns and collecting rent. Me personally, as a guy from the internet, you might wonder, well, how can I help out? Well, it's usually my marketing chops and my automation chops, and then just being handy in general from my engineering experience and my life experiences that I get to hop in. And if you understand that vacancy is truly the enemy in these industries, you'll understand that even if you're in the bigger deals like me, I like to focus on 100 units or more. The operations, if they are not able to fill those units, somebody with marketing chops has to hop in and get those units filled. The investment depends on it. But of course, operations, you can only get so much upside from that as a repositioner. So the next place that they're going to look is going to be getting a contractor team involved to do a value add, because if the units are upgraded and nicer, the next resident should be more than willing to pay more in rent than the previous one. The job of the repositioner, though, is to make sure that that actually goes down that way, and it's not, hijacked because the contractors are dragging their heels or they're using substandard materials. Just basically making sure that they're getting it done and getting it done right. And if you're like me, I just mentioned this before, I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that will not be me. I'd still be stuck at an airport in an hour or two, so that's not going to fly. But when the repositioner has found an ideal property, assembled this team of heroes, and turn around to the financiers and say something along the lines of, hey, I got this 350 unit apartment complex. It looks fantastic. It's just tens of millions of dollars. You don't have, I don't know, tens of millions of dollars you want to invest, do you? Well, the financier is going to have one burning question in their head that I haven't answered yet. And if you're in a coaching program or a mentorship program, you'll probably notice that they really glaze over this one. They're going to ask, who's the sponsor? Who's the KP? What's that all about? Even if you are a physician or an engineer or an attorney and you have a group of friends, you all want to combine your 50K, 100K, whatever amount of down payment and take over a local commercial real estate business, the flaw in your plan is to be eligible for a commercial loan. The bank is going to demand that somebody in the fold already owns a similar asset. On top of that, you need a certain amount of liquidity. And then among the GP team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Sam, I'm not sure about your organization or which parts you emphasize the most. I imagine you got a team that checks all of the different boxes. But as far as you go personally, or however you want to represent to yourself today, which roles do you tend to take over?
So we do all of that. We are in every deal that I'm in, we're the lead sponsor.
Mm-hmm.
We got a lot of experience. We've made a lot of mistakes. We're happy to teach people how to keep making it and going along the way. But ultimately, we want to make sure that if all goes to hell, that we can, step in and do all the things that we need to do fix the property, make sure investors get their money back.
I love that answer. I love that answer. It makes me even more excited for the next question, which is the buy box. When commercial real estate people are talking to each other, they're saying, hey, what you looking for? What's your ideal property? What's your buy box? We're really asking about three main things. First one's geography. Where is it? Which state? Which county? Possibly even which neighborhood? Before you call it ideal, that location is definitely going to matter. The second one is size. Now, most of my guests on this show are in multifamily, which means apartment complex investing. And the way that you define size in apartment complexes is based off of unit count. That's also true of self-storage, which you mentioned. And there are some forms of industrial that go off of square footage. But the main thing is you're going to have a completely different group taking over smaller properties like a 10-unit property versus the 100-unit, 150, 350 unit properties. So that size is definitely going to matter just because you need to have a different type of team. But the third one, I'm calling it desirability. A lot of people call it class, but I just find it problematic because they use the same word for two completely different things. The first one is the condition, and then the other one is the area. And when you're talking about condition, it's how old is the building? You know, was it built in the 70s or the 80s or the 90s? You know, they call that vintage. But how beat up is it? How reasonably good shape is it in? What sort of luxuries and amenities does it have? That's the condition. Whereas the area, you're talking about a few things. One of them is the crime rate where the property is located. Another one would be the school districts where the property is located. But that old saying in real estate being all about location, 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 the secret of that is they really mean traffic, traffic, traffic. If tons of people go by a location on any given day, it's going to be more desirable and more valuable than somewhere else. But both the area and the condition, those two versions of class, they're ranked the same way as in grade school. So you got A plus at the top, and then A, and then A minus, and B plus, and so on. So Sam, as far as you and your organization goes, what's easier to say yes to and more difficult to say no to?
Well, depends on what assets we're
Mm-hmm.
talking about here. So if we're talking about mobile home parks, we're generally, if we're going to acquire, it's going to be 100 lots or more,
Mm-hmm.
and it's going to be in distress, lots and lots of value add.
Mm-hmm.
Um, we
Mm-hmm.
want someplace where we can create impact and make a big difference.
Mm-hmm.
Apartment communities, it needs to be at least 150 units.
Okay.
I haven't bought anything lower than 180 in the past 2.5 years.
Mm-hmm.
And so we like 150, 200, and upwards. Again, it needs to be in distress. Like if we can't come in there and make a big difference to the community, the residents, then we're not going to take on the project.
Yep, I love it. I love it. So in self-storage, the other factor I keep on hearing, and also with mobile home parks, is space on the lot to expand. Is there anything that like guidelines where if somebody, because like really what I'm trying to do is I'm trying to make it so if somebody in the audience has a perfect deal that's just right for you, then they know they can let you know, and they're not barking up the wrong tree. So like, do you have some sort of guideline for room for expansion, or is it on a
Yeah,
case by case basis?
it's always going to be you're always going to evaluate the market. And, in storage, you can have too much storage in the marketplace, but still have a great place to build storage because it's right outside a brand new subdivision, for
Hmm.
example.
Hmm.
Right?
Hmm.
And so even though there's too much square foot per person or per, population wise, and the systems are going to tell you it's wrong, build it right outside the brand new community and it's going to get filled,
Yeah.
period.
Yeah.
Um, and what, nothing's absolute in life
Sure.
other than death. So the for mobile home parks, like people come, they just come. So you have to be able to expand and grow and create a clean, safe community there. And we're doing that plan right now at several of our properties. We're expanding those properties and making them bigger, service the
Hmm.
population better.
I love it. I love it. And then as far as people goes, that's who you would be looking for. My favorite thing about commercial real estate is because it's multifaceted. Nobody's really going to be individually all six sides of the die for any realistic amount of time. And so we're going to have our specializations, but we're still going to be super eager to put together new teams. It's a very, collaborative sort of industry. And at the same time, though, just like me with my online skills and marketing and this stuff with the camera and podcasting, it makes sense for me to talk to sponsors and KPs because they've got the foundation where a person like me can make a big difference. When you're first starting off as a repositioner, you need grunts who can put in 80 to 120 hours per week because that growth phase at the beginning is super duper difficult. But once you get going, then you can get somebody who can really take your CRM, and a 1% difference is way more than you're paying them each year. So it's the sponsors and the boots on the ground I'm most eager to speak to. How about you, Sam? If you have any 506B deals, don't mention them specifically, or the SEC will get ants in its pants. But
Yeah, yeah, yeah. We've done a couple dozen syndications before. Most of those have been 506Bs, friends and family. Lately, we've been doing 506Cs, and we just about to launch a fund, an impact fund that covers 5 properties. It's all heavy impact stuff. We have our own impact programs, how we change these communities, improve them, what we do for our residents, and so forth. That just makes a remarkable difference, and it creates profit at the same time, which is win-win-win.
Mhm.
Maybe win a little bit more. So we do sponsor. I do KP on the projects. I started with 30K in my bank, and now we have lots of stuff. So
Excellent, excellent. So is it primarily financiers who you think should reach out, or like boots on the ground? Who in the industry do you want to? You just can't get enough of them.
I love everybody for different reasons. So financiers, investors, boots on the ground, folks have been doing this for a little while, folks have been doing this for a while. We've helped people go to, learn how to work with institutional partners and get institutional equity checks where somebody's going to write you a 5 or 10 or $20 million check. That's a different world.
It
Um,
sure is. It sure is. I love
yeah.
it. And speaking of those gigantic checks, some people in the audience must be thinking, how on earth do I get a hold of you? And me, I'm lucky enough to have a very distinct last name. You can see it right here. And that makes it really easy to find me on the social media platform where I spend the most time, which is, of course, LinkedIn, because that's for professional stuff as opposed to Facebook where you're talking about your cats. So that's a great way to get a hold of me. But if you scan this QR code, that goes to the FAQs page of 506 BME, which is the service that I offer to syndicators, new investors, and whatnot of documenting your substantive relations so that when the SEC turns around and audits you for whatever reason, you've got that documentation in place showing that you've established level of sophistication, appetite for risk, core competencies, intended contribution, and things like that. So that's a great way to get and reach me. You'll see the silly titled book, Real Estate is a Scam, that's available on Amazon. But Sam, if everybody wants to get a hold of you, social media, email, phone, like website, what are the best ways to reach out?
So you can find me on LinkedIn, Samuel Sells, Sells. Just it's a verb, and so it's always a little bit of a challenge when you typed it into Google. But you should see me come up at the top or pretty close to the top on Google. Wild Mountain Capital is one of our companies. We have syndicationlaunch.com as another company that you can go to and find out a little bit more about us.
I love it. I love it. And the last thing, I'm trying to hold off a sneeze right now. It's my public service announcement. It's not actually for Sam, it's for you. If you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine-like symptoms, I'm quite confident it's because of the hideous subscribe button, and you should probably do something about it. It's okay. I'm biased. Okay. If enough people hit the button, then YouTube will start to pay for these videos instead of me. And I think that would be amazing, which is why I have to ask. But as far as trade-offs go, as I mentioned, there's no email, there's no credit card involved. It's totally free. All it means is my videos may show up on your list of suggestions. And as far as I'm concerned, you can go ahead and ignore those suggestions because I just really appreciate the fact that you spent this time with me. Just like Sam, I appreciate you joining me today. This has been great getting
Yeah.
to know you a little bit.
Yeah. Thank you, Dan.
Awesome. Hey there, are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.